Good morning. It's Tuesday, September 12th, about 6 a.m. Central Time. Look at the precious metals overnight. They're weaker here after yesterday's gains. We've got gold down $10, 1937. Silver down 19 cents. It's actually making a new low right now, 23.19. Copper down 1 at 3.80 and platinum down 5 at 8.97. So, the US dollar, it's bouncing a bit here. It's up 27 ticks, 104.81. You got treasury yields. They're just slightly firmer at 4.28. There's not a lot of news out there. Not a lot came out in the overnight session. So I think this is a little bit more backing and filling, but I really don't like the chart on the gold market at the moment. It does have something that looks like a head and shoulders pattern. We've just been building that right shoulder. We've got a breakdown below that 1940 level, and that's been the level that's held the last 4 days. So it looks like we're going to come down. We might test some of these lower levels in the low 1900s. If you look at the previous contract low, it was right around 1915. So we might be going down and working our way down to test that. That's why we've been really reluctant to add many more positions onto some of the core positions we have on the gold market, kind of keeping that as insurance in case anything happens out there. I know that in the long run, the Federal Reserve will reverse its policy decisions and it will start cutting rates, especially in the first quarter of 2024 once GDP starts to contract and the global economy continues to track more. So the current trend on gold is bearish. The first level support, again, 1940, it broke. I gave you the level here yesterday. I believe it was about 1944.20, where system traders had generally flipped to the short side, the trend following traders. And then 1978, your 200-day moving average. 1968 is going to be your trend reversal point. We need to see a break above there. We need to see it retest that 200-day moving average, close above it, and then it can march on from there. We do have a lot of data coming out this week with CPI. They're expecting month over month 0.5%. So people might be using yesterday's rally in order to lighten up some of those positions. Silver market, again, that one's bearish as well. The first level support 2350, which we broke below that. So now that's going to act as your level of resistance. So you got a couple levels here. You got 24.13, that's your 200-day moving average, and then 24.58, that's your trend reversal point. Need to close above there. We can start threatening to the upside. So if you miss the opportunity to add some of those longer-term dated call spreads, now I think it might be another opportunity for you. We did the March. It was the 26, 27.5 call spread. They were running about $1,250, somewhere right around there. And the thought process isn't that it's going to go to 26 or 27.5, despite people's long-term views. The thought process is that we get a snapback, a relief rally, and then we could take off some of those positions. So if you got an in pairs, maybe you sell one at 40 cents. You hold the other one here as a wild card, maybe as a free trade there. So outside markets are mixed. You got U.S. equities a bit lower. We are putting on some of those 4,500 December put options for the micro S&P. They're running right around about 100 points here, $500 a piece. Thinking that market could break down a bit more. We retest some of the recent lows. Those things will pop up to like 135, 140, somewhere in that range. We'll look to take them off again. Just more of a trading affair. If you look at these markets, they're kind of just going back and forth. Something to note, crude oil making highest level of the year right now. Retested $88, 88.18. So pretty amazing that run on the crude oil market. Never really gave us many more opportunities since the breakout to the upside. You got to be a little bit more courageous if you're going to jump into that market. Something to note that the CME, they did launch. They don't start trading, I believe, until October 2nd. It's going to be your micro crude options. So I think that's a great thing that's out there. It's going to enable us to sell some covered calls against that smaller position, that 10-ounce contract, and also, put some more defined calculated risk positions and help manage the risk. So I sent an email requesting the CME to launch the 1,000-ounce silver options. So we'll see where we get with that, and I'll pass along any information if I get any further details. Any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.